All right, good morning from the west, and I believe it's wherever you are in the central and east coast. It's afternoon already. Welcome you guys on our elite financial consulting call. Um, every Saturday, we call it Super Saturday, and we bring in the best and the most important um, way or benefits, whether you are business owners or individual, you will get a lot of benefit from our seminar. Okay, so it's a full agenda today. We're gonna go through beside car insurance saving program, disrupt the whole car industry, insurance industry. Then we also help business owners to um, bring more money from the group health industry for the business owners. So Mr. Mike Hinsvart will go over that. And last but not least is all the talk of the town right now is FICA tip tax. It just due to the it's been around, but now it's even more open up because of the uh, big beautiful bills coming out. No tax on tip, no tax on social securities, and so on. So you guys in for the treat. So let's start off. Welcome our panel here from Good Driver Mutuality, Brigham Iraheta, and Alan Michaelis. So bring them first, jump on in and share with us what do we have here.
Since Alan's already sharing the screen, I think I'm gonna let him take it away. He does a
Oh,
wonderful job, and I can
oh,
talk about the business if that's all right.
all right. No, no, I thought Alan is just the man, the money man, like show me the money kind of guy. But now he do the whole thing. So,
No,
all
we're
right,
multi-tools. We can do it all.
all right. So, all right, Alan, take it away.
Okay, great. How much time do you want me to take, Andrew? I just want to be sure I'm pacing myself.
Well, what time is we have 24 hours a day, so you can take 24 hours. No, one
Okay,
hour would be great. Okay.
we'll be definitely within that. So sounds good. Here we
Okay.
go.
All right.
Okay, Andrew, thanks so much for inviting Brigham and I to be on with you today. Andrew, we just love working with Andrew. He's one of our great promoters of what we're doing. He gets the vision of this. We're disrupting the space. We're using high tech. It's AI, and it's a lot of fun. Thank you, Brigham. Brigham and I are happy to be here to share this message invited by Andrew today. We are Good Driver Mutuality. We're a place for good drivers to save money on their car insurance, up to 40% compared to what you're currently paying. We do it through a mutuality approach, which is people helping people. So I'll explain how all of it works, but think big savings and people helping people. That's our core concept right there. At Good Driver Mutuality, we're an alternative to collision and comprehensive insurance that saves you money. We're not an insurance company. We're different. So we're not bound by how insurance companies are working today. We're a fresh new approach that saves everybody a lot of money and it's cutting edge and high tech, and no one else is doing it. We're the only one that is doing this. Looks like we've got some, there we go. Yeah, and of course the product is the solution, right, is so needed right now. Look at what's been going on to our car insurance rates over the last few years. Huge, huge increases. We've all felt the pain, the sting of these increasing rates, but there's nowhere you're going to get a significant savings toward what you're paying for your car insurance than through Good Driver Mutuality. We have got the solution and we're the only one offering it. Well, before we jump into the details, right, let's review some big picture stuff about the car insurance space that will help set the stage for why we're doing what we're doing. Look at the pie chart in the middle. 94% of us don't have an accident in an average year. We're good drivers, right? We don't have an accident, and yet our rates are going up a lot. It's not fair. It's frustrating. Only 6% of people have an accident. So at Good Driver Mutuality, we have a solution that saves you significant money if you don't have an accident. That's exactly how our model is set up. We'll show you how it works. Over here on the left, this bar chart, this represents all of the revenue insurance companies are taking in. On average, right, only 60% of their revenue comes back out to fix cars. We think that's too low. This is their thing, right? They fix cars when they have an accident. Only 60% goes toward that. Their overhead is 40%. And if you want to know where a bunch of that goes, watch TV. And in just an hour, see how many car insurance ads you watch. You see, right? I like to watch sports, and you see them all during an average sports game, it seems like. You've got the Mayhem guy from Allstate. You've got Jake from State Farm with the athletes and coaches. You've got Flo with Progressive. And you got some other progressive ones too. You got Liberty with the yellow shirt guy, with the ostrich, and the gecko, right? From Geico. And you just got all the top companies across the country in terms of revenue, insurance companies, they're spending hundreds of millions of dollars, often over $1 billion a year each company on advertising. What it looks like they're doing, right? They're pulling market share away from each other. That's their thing, right? Pull customers away. And so they keep spending more and more. Who's the loser in that? We as the consumer are. We're the ones that have to pay for all of that advertising. So we don't do advertising, okay? We are person to person. And the first way we're saving you money, this 40% that insurance companies take to run the company, we've cut that in half. We run our company on 20% of the quote. Right off the top, we're saving you 20%. And actually, we're going to save you up to 40%, maybe even more. But right there, we're saving you 20% because we run our company more efficiently. Let's review how car insurance works so that we can give you a good perspective of how we fit into that, right? In this column are all of the various insurance types of insurance, right? You've got your liability insurance. It's required by law, and everybody's got to have it. And that's to protect you if you hit someone else. So let's say that I'm driving along and Brigham's driving along. We're on the same road and I hit him. My fault. My car hit Brigham's car. Okay. My liability insurance is going to pay for the repairs to Brigham's vehicle because I hit him. My fault. Well, when I hit him, I had damage to my car too. And my liability insurance doesn't pay for the repairs to my car. That's only for the other guy. To get my car fixed, I've got to have collision and comprehensive. Those are the elements of car insurance that fix your own car. And that's what we've done at Good Driver Mutuality. We've carved out collision and comprehensive from your total insurance, right? Insurance area. We also have roadside assistance and transportation assistance. And we offer that as a separate product. And we're going to save you up to 40% compared to what you are paying today for this with your insurance company. It's huge savings. And a few of the questions people ask often at this point is, well, how much of my total insurance bill is collision and comprehensive? It's often around half or more. It's around that much. It varies, right? Depending upon who you're with, your driving situation, your policy, your car, all of the factors that go in to determining a quote, but it's about half. So this is significant savings. And then people also wonder, well, if I drop, right? If I drop this from my with my insurance company, am I still going to get my bundling discount? And the answer is yes, you will. If you've bundled your home and your car with your insurance company, yeah, don't worry, you're still going to get your bundling discount. You're keeping your insurance policy with your insurance company, but you're just adjusting it to remove collision and comprehensive, roadside and transportation, and putting that with Good Driver Mutuality. And then some people also ask, aren't they going to charge me more for these if I drop these? No, they don't. These are all specific line items. If you drop this, You just save exactly what that was costing, but they're not going to charge you more for these. It's a clean, exciting way to save money. And remember, good driver, we are repairs to your own vehicle. We're nothing medical. So you keep your personal injury protection, med pay, you keep those with your insurance company. We are repairs to your own vehicle. And I'll show you our process, but we do a great job with that. So that's our solution to help people save money, right? You keep your insurance. We're not an insurance company. Keep your liability, but get collision comprehensive and roadside and transportation assistance through Good Driver Mutuality. We've just been enrolling people like about a year with our current version of our product. And it's thousands of people, thousands of cars coming on board. It's really exciting. Well, here's how the money saving model works in more detail, guys. So we do everything with our product from an app, and that's where we're high tech. We use AI, and it's how we save people money, right? You're not going to see a bunch of brick and mortar buildings across the country for Good Driver Mutuality. That's not how we operate. It's high tech. It's through an app. So you download our app, and then you upload your insurance declarations page into our app. And like I've been an insurance customer for 40 years, right? I didn't know I had a declarations page, but we all do. Super easy to find. Go online or go to your app and just go to policies, documents, find your declarations page. It's got your VINs information in it, your drivers. It's got all of your policy amount you're paying for your different areas on your whole car insurance policy. Comprehensive information. Everything's on there that we need. So you upload that into our app within minutes. We're going to give you a quote. Now over here on the left, this bar represents what you're currently paying to your insurance company for collision and comprehensive. Our quote we give you is going to pretty much match that. But here's where the money savings happens. When you join Good Driver Mutuality, you don't pay the full quote. So you've been paying your insurance company every 6 months this full quote, but you don't pay the whole thing to Good Driver. You just pay a 20% enrollment fee to Good Driver Mutuality. It's just 20%. And you're in. You've got a plan, a collision comprehensive plan with Good Driver. And then the 80% that you didn't pay is called your pledge amount. You're pledging to pay it if necessary to help other drivers with their repairs. That's where the mutuality part comes in. All we get to run the company at Good Driver is 20% of the quote. That's all we get to run the company. So just to get your mind wrapped around the big picture of what we're doing, right? If you join Good Driver today, and from today on for the next 6 months, nobody in our community of thousands of cars had any accidents, then you wouldn't pay another penny. You would have just paid your 20% service fee, nothing else. You're only dipping into this pledge amount when someone in the community has an accident and is to help fix their car. Now, we expect that during the 6 months, it's a 6-month plan, you're going to spend 40% of your quote, about half of this pledge amount, helping other drivers with their repairs. But we don't know, right, how much it's going to be because we're not collecting that up front or anything. Just when someone has an accident, then we collect the money and it's all separate, right? So that we're only collecting what we need for repairs. And we announce on a weekly basis if anyone needs help. We call it weekly sharing. So you'll pay a little bit each week when someone has an accident. Well, by the end of the 6 months, you'll have saved 40%. And then you renew, which you pay your 20% service fee again, do the weekly sharing here and there during the 6 months, save 40% again. Every 6 months, you'll save up to 40%. It's so exciting, you guys. It's huge, huge savings. Now, I'll tell you my experience. I'm on my third 6-month term with Good Driver. The first 2 terms, I did my 20% service fee. During the 6-month plan period, I didn't spend 40% helping other drivers with their repairs. I only spent 12% helping other drivers. So I actually saved 68% each of my first 2 periods with Good Driver Mutuality. People renewing right now are saving in the 50s or 60%. So when we say you're going to save 40%, we're under promising and over delivering. And that's the scenario if you don't have an accident, okay? Good driver mutuality. We're a place for good drivers to save money. So you're being more careful because you want to save money by not having an accident, okay? Well, if you do have an accident, here's what happens financially. It started out just the same, right? Because we don't know who's going to have an accident. You just paid your 20% to get in. You paid a little bit of weekly sharing during your 6 month plan, and then you get into an accident. We get you into one of our repair shops. We help you get your car fixed. When you pick up your car from the shop, you're going to pay your deductible, whatever amount you set that at, right? And then you're going to pay this remaining pledge balance. Whatever you hadn't paid yet from helping other drivers, if you're the one that gets in the accident, you're paying that amount towards your repair. So if you do get into an accident, you're breaking even compared to if you had your insurance. Remember, with them, you paid this whole amount up front at the beginning of the 6 months, whether or not you had an accident. With Good Driver, you're only going to pay the whole thing if you have an accident. And so 94% of the time, you won't have an accident. 94% of the time, you'll be experiencing these big savings. But when you do have an accident, then you're paying. You're paying this amount. So it's a huge incentive for people to be better drivers, save money, which is helping to save lives. And we'll talk about that as we go along too. So it's just a clean, exciting way to save money. Now, here's another actual example. I told you my experience. This person here, and by the way, this screenshot you're seeing right here, these numbers, this is exactly what every one of us sees on our app, our Good Driver Mutuality app, right on our phones. Anytime you can look in there and see how much money you're saving. So this person here, when they enrolled in April, their quote, right, what they've been paying their insurance company every 6 months was $1,377. Their 20% service fee was $275.40, just 20%. And they were in, they had a plan, right? And then during the 6 months, you can actually see the history right here every week, how much they paid or right or didn't have to pay. Zero, zero, zero. $2.99, zero, zero, $4, $24, $41, zero, zero. You get the picture, right? You pay some weeks you don't. You should plan on paying a little bit every week because that's usually how it works out. But it's only if people have accidents. Well, during their 6 months, they saved $882. One car, one 6 month period, $882. What could you do with $882 that you were just throwing away before? Think about it. It's wonderful. So here's the scenario. If you do have an accident, okay, we already talked about it, but here's another example. Let's say your repair, you got into an accident, your fault, right? Because remember, if someone hits you and it's not your fault, their insurance is going to take care of it, and you don't even involve Good Driver Mutuality. But if it's your fault or you hit a lamp post or a light post or a fence or there was some weather damage, whatever it was, right? Then that's the scenario that Good Driver helps you, repairs to your own vehicle. So let's say the repair cost was $10,000. We got them into a shop, got their car fixed. When they go to pick the car up from their shop, they're paying their deductible. We call it out of pocket because we don't like to use insurance words, so we call it out of pocket. So they pay their deductible, and you set that to 50, 500, 1,000, whatever you want it to be. And then you pay your remaining pledge amount. That amount right here, right? That 80% that you didn't pay up front, whatever's left that you hadn't paid in weekly sharing, you'll pay the rest of that. In this example, we've set it $700. And so the remaining amount, 8,300 for the repair of their vehicle. We're all in the community helping with that in the weekly sharing. And so, as Andrew said, we got thousands of cars on our platform. Right now, it's over 6,000, right? So let's say that there's 6,000. It's a little more than that, but let's say 6,000, okay? If with 6,000 cars and a bill of 8,300, each of us would pay on average less than $2 to help this person with their repair. That's how it works on average. So It's just a clean, great way to help us all be better drivers and to help us all save some significant money toward what we're paying for our increasing premiums of our car insurance. Well, another way we're helping people save money in this model is we're selective in who we let in. We don't let commercial vehicles in. We don't let motorcycles in. We're just passenger vehicles, right? Now, there's 5 states we don't enroll people in: New York, Massachusetts, Rhode Island, and Alaska and Hawaii. The collision repair process in those states is very expensive. It's just not consistent with what we're trying to do with our money saving model. So we don't enroll people that live there. However, if you like what we're talking about today and you live there and you want to share this with other people, we can get you enrolled to do this as a business. And if you're a member and driving in New York, no problem. We'll get you taken care of. We just don't enroll people in those 5 states. Also, if your car is a real expensive car, more than 100,000 MSRP when it was originally for sale, it's too expensive. We're not for Porsches and Maseratis and Lamborghinis, right? And so forth. We're for average people to save money on their car insurance. If your car is up to 15 or 20 years old, great. Older than 20 years, it's harder to get parts, can be more expensive to repair, and we're only for cars up to 20 years old. If you drive less than 30,000 miles a year, great. If you drive more than that, then you drive too much of a risk for us. And also, it's good to note here too, if you have a loan on your car, right, financed or leased, then you've got an agreement with your bank to have full insurance coverage. And we're not an insurance company. So if you drop that insurance and get good driver, we'll let you in, no problem. We are here for you, but you've just got to sort out with your bank, right? Make sure that's okay. We're not going to get in the middle of that. That's up to you. And we want to be sure you don't get into trouble with your bank. So our sweet spot is paid off cars. That's obviously who we're perfect for, is paid off vehicles. When you look at paid off cars from the 45 states we enroll people in with cars that aren't more than 20 years old, there's 140 million eligible vehicles across the country for good driver mutuality. We're brand new. We've got 6,000 in today. So this whole opportunity, right, is new, is virgin, and it's so exciting to help people save money. Well, if you do get into an accident, we've got you taken care of. Another way we're saving you money compared to the insurance companies is you get your vehicle repaired through one of our partner shops. We've got over 5,000 of them all across the country through Innovation Group, Service Up, Crash Bay. And we're going to get your car fixed for you, and we'll be at a competitive rate, a good rate, right? And so you're not going to pay inflated OEM rates that insurance companies don't mind paying, right? But it's going to be a super high quality repair. It's so much that we give you a lifetime warranty on workmanship and repair quality. I've never had that through an insurance company repair. I had a Jeep Cherokee. This was several years ago. Somebody hit us, and so their insurance was doing our repair. And when the car was done, I went into the shop and picked up the car, and the shop owner is describing the different repairs. And they had to give me a new hood because the hood had damage, and they had to paint it to match the rest of the car. Well, he said, you've got a 5-year warranty on the paint job. And I thought, okay, sounds good, right? Well, 5 years and 2 months later, guess what happens? The paint starts to peel on my hood. And I'm like, wow, why is the paint peeling on my hood, but it's fine everywhere else on the car? So then I remembered, oh yeah, I had that accident. We had to get the hood replaced. I remember there was a warranty. So I call up the shop and say, hey, my paint's peeling on the work you guys did. Can I bring it in and have you guys fix it? They looked me up and said, Alan, you're 2 months too late. Nothing I could do. Well, I just had to take care of it on my own, right? With good driver mutuality, with our repair process, as long as you own that vehicle, 1 year, 5 years, 10 years, 20 years later, if you have any issue with that repair, contact us. We'll get you into one of our network shops. Doesn't even have to be the same shop you had it done at. We'll get that taken care of at no cost to you. That's a better deal than I've had with insurance company repairs. And in this business, we've heard some scary stories about people that have just had some poor repairs done, through their insurance company. So we're going to take great care of you. Here's the other organizations we've partnered with to help make sure we just have. In fact, we're going to get your repair done at least 2 weeks faster than the insurance companies do. They're averaging getting people into a shop in 3 weeks. Our average is about 3 days to get people into the shop. We just do a great job with our repairs. Well, a little more about the company, and then we'll talk about the business opportunity associated with this too. Our headquarters is in Palo Alto, California. A beautiful building there. Our service center, the guys who work with your repair process, if you have an accident, are located in Richmond, Virginia. Our founder is William Tu, a brilliant entrepreneur. He's a Stanford Graduate School of Business alumni. In fact, he was president of their alumni association for a while. He's won entrepreneurial awards. He's had this vision of bringing car insurance savings to people through this exact process for a decade and finally bringing it to market. He's so excited. But look at our mission down here in the bottom left. Our mission is incentivizing good driving for a safer tomorrow. Our mission isn't saving you money. That's what we do, right? We save you money. But our higher purpose, our higher mission is helping people be a better driver, which keeps the roads safer. We've all lost someone we know to death, right, from a car accident, and it's tragic. I've had several friends over the years, right, and it just every one of them just tears my heart apart. William, our founder, he's run the numbers on this. He's a numbers guy. For every 10,000 vehicles we get on our platform, because we're promoting safer driving, we're going to save one life every year for every 10,000 cars that come onto our platform. So guys, saving money is great, right? Join us for that. But if you want a higher purpose to join us, join because we're promoting safer roads. In addition to our platform promoting safer roads, we've joined End Distracted Driving and the Governor's Highway Safety Association, two organizations that do education and outreach across the country to help us all be safer drivers. Go to this website when you have a chance, enddd.org. It's the End Distracted Driving website. They have got some great materials on there about how to help all of us, especially teenage drivers, right? But all of us be better, safer drivers, even to teach our kids how to not distract mom and dad when they're driving. They're a great organization, but we've joined them because that's our vision, that's our purpose. We're really putting our money where our mouth is and saying we're saying this is us and this is what we're doing. Well, that's our product piece, and now we'll jump in and transition to the exciting business opportunity associated with Good Driver. Brigham, do you want me to keep going, or do you want to take this piece? Oh, you're on mute, my friend.
So I was gonna say you're on a roll and you actually do the business part a lot more efficient. I feel like I get too excited and I get on and on, but I think that for the sake of time, you're on a roll.
Okay, I'll keep going, but feel free to jump in whenever you want.
Okay.
Okay. So as I mentioned before, we don't do advertising for this, right? You don't see us on TV. That's why you've never heard of us till today. We are a person-to-person marketing, and we have a great compensation structure for you sharing Good Driver with your friends, family, whoever you want to share with. So right here, I'm over on the left side in that first column, right? That 10% number. Every time you share Good Driver with someone, you earn 10% of their quote amount. And there's nothing special to do to be able to do this, right? You just join the program, get a car on, and you've got a referral code without any additional payment or registration or anything. You're able to earn 10% on everyone you share with. And we have no limit. You can share with 1 or 5 or 10 or 20 or 100. As many people as you share with, you're going to earn 10% on that quote amount. Now remember, we're only getting 20% of the quote to run the company. We're giving you half of that, 10%, in commission for introducing somebody. So let's give you an example. Let's come back here to this slide I shared earlier, an actual example slide. This person Their quote was 1,377. Remember, they were paying that every 6 months to their insurance company. But with Good Driver, they ended up saving $882. Anyway, whoever referred them, right? Whoever introduced Good Driver to them made 10% of that quote amount as a commission. They earned $137.70 just for helping their friend save money. This is such a clean business, right? You're saving money when you come in, and you're helping your friends save money. You're not asking them for any new money out of their family budget. You're just saving them money, and then you're making money by helping them save money. It's a win-win-win all the way around. And so you earn 10% every car you bring in. Well, your first goal, if you're trying to build a business, is to direct refer 8 cars. Once you get those 8 cars in, you're our first recognition level, L1. And at that point, you're still earning 10% all the people you refer. And from that point on, you're earning 8% on your people's people. Because they're doing the same thing, right? They're excited. And so they're sharing with people. Well, you're getting 8% of the quote on everyone they share with. And then you just keep on sharing, right? To get to L2, you keep building your team. Now you need to maintain these 8 cars all the way along, but that's all of the direct referreds you have to maintain. So you're helping your people build their teams, or you're bringing more on yourself, whatever you want to do. But once you get to 20 cars, then you're our L2 level. You make the 10% still, the 8% still, and you're making 5% off of your people's people. And you just keep on going, bringing in more cars, building a team. And all you're doing is helping people save money. The cleanest story. Now we've already got somebody that has, between them and their team, introduced over 4,000 cars. They're in L8 level. They're almost our highest level. They're L8, over 4,000 cars. And she's only been doing this less than a year. And she's already, her and her team have already brought in 4,000 cars. So, and then we got people, obviously, lots of people at these other levels. But our highest one, L8 already, because it's a clean story. Everybody wants to save money. They need to save money. And everybody is saving money when they join Good Driver Mutuality, right? It's a great, great system. Well, this commission structure here, all these percentages, paid out on a daily basis. Someone on your team enrolls, or you bring somebody in, the next day you're going to see that. Sometimes it's even the same day, right? You're going to see that show up, that commission. No waiting for the end of the week or the end of the month or the 15th of the next month. Daily pay. And there's a couple points on here I haven't told you about because they don't exist. There's no monthly fee you have to pay to participate in getting these commissions. All you did was come in and bring your car in and start saving money. When you become an L1, you pay a $9.90 fee because you're becoming an affiliate. And that's also the annual fee, $9.90. That's it. It's just incredible. And there's no monthly quotas. You don't have to do these numbers here every month, right? These 20 cars, 50 cars, these are cumulative numbers. Once you get to that level, then you make that rank. It's so great. Now, there's something we don't specifically call out on this slide, but I'll tell you about it now. At this L9 level, 12,000 cars, L9, the first 50 people to get to L9, we're going to give them 20,000 stock options each when we go public, which we expect to be in 2 or 3 years. And no one's got to L9 yet. So all 50 of those spots are available. Andrew, I am so excited for the day that you reach L9, my friend. That is going to be a party celebrating with you. We love you, Andrew.
Absolutely.
But that's not the only bonuses you get with Good Driver. We've got these other bonuses that are huge, right? Because we really want you to get a jump start growing your team when you enroll. So we've got a $20,000 bonus option, right? That kicks in the day you start. And so you join Good Driver. If you can get those 8 cars within your first 20 days, we've got a $300 bonus for you. And that's very doable. In fact, some people do it within a week. It's very doable because you're just helping people save money. And then from then on, your goal is to build three strong teams underneath you. That's what your focus is, right? Three strong teams. So you get those 8 cars with L1, help three independent people under you get to L1, 8 cars each is all. And if you do that within 60 days, which is so much time, you're going to get a $1,200 bonus. And then same thing with L2, L3, L4. Help you get there, help three of your teams, three separate teams under you get there, and you get these 2,500, 4,000, $12,000 bonuses. If you max them all out, you get them all, $20,000 in bonuses. Plenty of time to get them. The perfect story, great compensation. We've got people that have made tens of thousands of dollars within their first few months promoting Good Driver Mutuality. It's for real and it's exciting. Now at the L5 level, which is only 300 cars, L5, if you have three teams under you that grow by 40 cars in a calendar month, you're in bonus pool A. With the bonus pools, you're sharing in all of the company revenue, getting a commission from every single enrollment that came in during a month. Even from your own team, everybody else's teams too. Sharing in 1.5% of all of the company volume. Even better is 4 or 5 teams that grew by 40 cars in a calendar month, and you have that happen. You're sharing in 3.5% of all of the company volume with everyone who qualified. Now, we're new, right? We've only got 3 people in these pools so far, and nobody's been to Pool C yet. So guys, entrepreneurs like Andrew, you've got here on the line today, we are ripe, right? We're new, we're ready, nobody's heard about us. 140 million cars in the total available market. This thing is just ready for people like you guys to take it, run with it, and really make some exciting commissions. At the L6 level, there's even more cool bonuses, right? 750 cars at the L6 level. You're one of the first 15 to get there. We've got a brand new Tesla Model 3 for you. Or we'll cash you out at current market value, whichever you want. We've already had 5 get there. So there's 10 more cars available at the L6 level. It's a race to see who's going to get them. At that same L6 level, the first 100 L6s are recipients of the regional reward. They get to pick a state or county anywhere across the country and get 1% of the sales for a year of all the enrollments from that state or county for an entire year. Huge, huge additional bonus opportunity. All the bonuses I've shared with you so far are based on the initial enrollment. And if you've done the math with me, right, we're only collecting 20% of the quote. That's all we get to run the company. And we're paying out 2 or 3 times that much in all of these bonuses. So when the renewal happens every 6 months, it's a different commission structure. We keep most of that to run the company because we've got to fund the company operations. However, for our top 2 levels, L8 and L9, there are commissions on the renewals. As an L8, you earn first time 1% on all the first time renewals on your team. As an L9, you earn 1% on the first and second time renewals on your team. We got 1 L8 so far. It's so exciting to talk with her. She says she wakes up every morning and looks at all of the 1% renewal bonuses she got from everybody. She got over 4,000 cars, right? We have a high retention rate because everybody wants to keep saving money. And so on those renewals, she's making money on every one of them. It's exciting. Well, last slide to kind of bring it all together, right? Today, we're in the United States. We're auto collision and comprehensive. It's a $170 billion market. It's a huge opportunity. No one else is doing what we're doing, offering a mutuality alternative to save money on your car insurance. We are the only one. So you join us, represent us, share this. There's no one else out there, no other company doing this. And this is exciting, right? Huge opportunity. Can't say enough about how big it is. However, our vision, right? William, our founder, his vision is to expand into auto liability, house insurance, other insurances and financial services, new and used car sales, building up to $1 trillion market just in the United States. but he wants to get into Canada, Mexico, Europe, Asia, et cetera, right? All across the world. So the larger you build your community and your network today, the greater opportunity you're going to have in the future as we expand into these other geographies and other products and services. You'll get commissions on all of this through your team. Well, that's it, Andrew. This is so exciting. I'm so glad you had us on today to share this. Man, we love it.
No, thank you, Alan, for your time. I know that the company is very, very busy schedule, but you squeeze in your time. Appreciate
Very
that.
good job, Alan. You know who this is.
Oh,
Yes.
Stan the tree shaker. Hey,
Yeah.
Stan.
Your
Great to
tree
have you
shaker.
on today.
Yeah, we had we have more people on. Look how many people we have today. I sent out invites to make
Whoa,
sure
you
that
got
we
a crew today.
make sure we get people on. So we're spreading the word, and we call Andrew TS2. That means tree shaker 2.
I love it.
Awesome. Anyone have any questions at all? We got a minute or two and then the next speaker will coming up.
Hey, Andrew, Sheldon. Hey, what about for the windshield? Like I'm with AAA and they have their windshield replacement. Is that part of the comprehensive, not the liability? Does Good Driver do
Yes.
that?
Yep. We do windshields. Yep. We've partnered with Safe Light Auto Glass to take care of your windshield needs. Yep, we got you.
All right, cool. All right, you answered that question. That was an easy one.
And there's one questions on the chat. It say, "What about PDR?" I don't know that abbreviation is. So, Brian, you can unmute yourself. Anybody else has any questions?
It's paintless stent repair.
Okay. When you have any kind of a
Hail
collision,
damage.
whatever accident, we'll get you into one of our shops and they're going to use whatever process makes sense. So yeah, you can talk with our mutuality advisors about that and see what process and what location is going to make the most sense.
Yeah, and we do have a specialist for painless dent repair. I know that. What's their name?
I don't remember which one it is, Brigham. Do you want me to show that slide again?
Nextera.
Okay.
All right.
Good call, Brigham.
And real quick, what is the website?
Yeah, Donna?
Because you have to have a good record for your driving to get in.
It has to be good enough. You can't have had more than two accidents in 6 months is too many. One accident in 6 months is okay.
If it's your fault, but if it's not your fault, then you can have as many as you want.
Okay, so it's only accidents. Somebody we know went the way on the railroad tracks in their car instead of a street, and they got a ticket, but they damaged their car on the tracks getting it off. Real weird story, but their record isn't that great driving either, so I'm not surprised. But it's an old infraction, and they're in Georgia, which I know you cover, but they have, I think, the highest possibly in the country, maybe. I don't, not the highest, not compared to like New York, but for their area, probably because Atlanta, maybe. But it's a very high area for anybody out there looking. But so she would be able to at least apply for it. She has
for
a car
sure,
paid
yeah.
for.
Yeah, exactly.
Like
And
a seven,
that's a nice thing. Just get their front and back of their driver's license, their declarations page, and get them a quote. Yeah, see what it's going to work out to be. Exactly.
Declarations page is where, real quick?
You can find it either in your app or online. You log into your insurance.
Where do you find it?
Policies, documents, and then declarations page online.
Yep. And
okay, cool. We're really excited about this.
Yeah. To Hal is on the app, gooddriver.ai, right there. Okay, Al, website, phone number, everything.
If somebody hits us and says it's our fault, but you know it's their fault, what do you guys do in that situation?
Yeah, submit it as an incident, and then you'll talk with our mutuality advisors, and they'll walk you through how to work with the insurance company and figure out who's going to be at fault, right? Some states have a split, right? It can be partially one, partially another, and the police report can help with that too. So yeah, just submit it as an incident. You can always withdraw it if it turns out to not be your fault, no problem.
Over
But
3
our
years
guys are
ago, I
good at
got
that.
hit
They'll
by a
help
guy.
you.
I got hit by a guy. I don't know if he was even he spoke English that well. He was and one of those types. And I was in the far right lane of a 3-lane highway, and he was trying to pass me on the to get off at the next exit on the right. And he ran his car, the passenger side door of his car hit the front left of my car.
Gotcha.
And I didn't think that State Farm even sent their attorney to the court case because they ruled it against me. And I'm like, how the hell did I lose? I've got pictures. I took pictures and sent it in. And I'm like, this is a lay down win. How did I lose unless the attorney just decided not to show up at court?
You know, I've heard some stories like that from others where clearly it was not their fault, and the insurance company is siding with the other side and saying, "Well, we're tired of them complaining. We're just going to say it's your responsibility and take it." There is up to 30 to 40% of fraud going inside your insurance premium with your insurance company. You're paying 30 to 40% of that for fraud. And that's one thing our guys are good at is detecting fraud, and we're not going to pay on it. And so we're good at that. But yeah, we'll take care of you. But that's another frustration with the insurance space. You're right, Brian.
Well,
Yeah.
I thought like they didn't fight for me, and they should have.
Yep, that's right. That's exactly.
So GDM, it doesn't matter. We don't care, right, Alan? We just take care of the client car,
Oh
right?
yeah, whether it's your fault or someone
Yeah.
else's, we're going to first see if someone else's insurance will pay
Right.
for it, right? If they'll pay for it, then that's great. But if they won't, yeah, your fault or not, we're going to take care of your vehicle. We'll make sure you get repaired.
Yeah. So and also one thing that I want to point out that I've been out of field, and a lot of people they misunderstand or they don't quite um, know the meaning. Like, oh, this is not insurance company. Oh, okay, So it's better that we are not. Insurance, because you know how insurance work, right? They crowdfunding, they take all out for insurance company. They know, like Alan just said, 94% of people that never get into an accident. So they know the statistic is very high, so they charge everyone and keep that 94%, and then make a profit out of it. We figure that out, and we create our own community percent. To take care of ourselves, and that's why you see that my personal all of my car was in GDM, and I just finished up the 6 months, and it's all more than 50%, and we promise only 40%. Okay, saving. So that being said, the save us and our client a lot of money. And for those of you that have license in life insurance and health insurance, PNC, whatnot, they use the saving money and set up another benefit account for them, like a term life or anything that fit them. It's just incredible. Okay, so but the most important thing is good driver mutuality is the only game in town. Okay, guys? So, and no license needed. Now the question is, how many cars that will be enrolled under you or refer under you? Because whether we like it or not, 6 months ago, like I joined, or I enrolled my car in with GDM. just like everybody else, and Brigham know this. I drill him, I ask him, I call, I talk, I say, what if this, what if that, what if that, blah, blah. And I go online and searching and research for 6 months. I wish I'm not that conservative when it comes to business, So, but it's okay. I should, if I joined like 6 months before that, I would be in probably is like around L8 or L9, So, but hey, that's why I have a message for you guys. But yeah, by all means, do your thing, whatever. But the opportunity is crazy, okay? And the way that GDM payouts referral, I heard of the word viral, but I never understood what it means when I joined GDM, because they're a podcast or someone nowadays on social media, they have millions of followers, and that person, if you recruit that person, enroll their car, and they just post one thing, say saving your car insurance on 40%, man, you got it instantly. Oh, by the way, I don't know if Alan mentioned, but you get paid instantly, okay? You don't wait until the 15th, the beginning of the month, or the month after. You get paid right away, guys. So we have a new, what I call it's the earning term. It's called ID pre. So ID pre. So I walk around and say, "Are you earning ID pre?" I say, "What do you mean? What is that?" It's instant, daily, progressive. What do you call that? Earning. Like so. It's just like residual, earning. So it's crazy, okay? So I remember the movies called, many of us, I'm pretty sure, missed a lot of opportunity, right? In our lifetime. Oh man, I worked for that Apple. My other friend worked for them, and he is like multi millionaire or even billionaire. And when it came to it, I said, "Oh, the guy is in the garage, so forget it," Or the movie is the founder about McDonald's movies, Ray Kroc running around selling what? Ice cream machine, guys. And he saw the opportunity. And then he went down in California here in Riverside, the McDonald brother in Riverside restaurant. And because he noticed that they order like 6 ice cream machines. I said, like, what the hell is going on here? So he personally drove from New York to restaurant, and he just blew his mind that how the whole system worked. And long story short, he saw it, and then he went to his best friend who owned the restaurant. Said, "Hey, please let me borrow a few thousand, or help us." And his friend was just like, "You got a great idea, but no thanks. My restaurant is very successful. We don't need anything." And guess what? He said, "Every time I go into town, I see the golden art, I kick myself in the no." So guys, I mean, in anything, I love it foremost, it's just helping people save money. You don't get the satisfaction when I sit in front of a husband and wife who only have 3 cars, guys. 3 cars. 2 Tesla and 1 Prius. And they pay freaking $7,700 and some change for every 6 months. And I walk in there, cut the bill in half, and then they only pay 20% of $3,500, right? And then, I mean, she was just like, I can see that the tears coming down, because she said, "Andrew, we work so hard for this money, and we see this $7,700 gone out the window every 6 months. And now you are here. Thank you, thank you, thank you, you know? So, I mean, when I talk to this, I get emotional. But the point is, and then I use that for 40, 60, 50% saving, put into her daughter, 18 years old daughter account, you know, IUL or term life or whatnot, you know, guys. So wake up. So anyway, appreciate
Andrew,
it.
I got
Yeah.
another quick question to ask the gentleman.
Yes, go ahead.
All right. You know, when people garages, you know, people their car, they may have like a hatchback, their BMW. You know, my wife had like a Range Rover, Ford Explorer, and then the garage door comes down and scratches it. And
Yep.
if it's 900 and if it's $1,000, it goes against your license. They said you had a collision, even though you bumped into your garage door.
Well,
So, so what do you know what I'm talking about? I know you guys have heard that.
well,
So
here's
how
the
do you
good
guys
thing.
handle that?
Yeah, we don't report anything to insurance companies or to the government or anything like that. We just take care of repairing your car. So
Okay.
we don't report anything. The shops may have some reporting they do, but I don't think but they don't care how it happened, right? I think in that case, we're not gonna report anything, and the shop doesn't know how your damage occurred. So anyway, I think it'd be okay.
Okay, yeah, because that happened. She garage door, and then I talked to the adjuster, and he said, you don't do it because it'll go against your insurance company. It'll be on there for I think 3 years. I said, for garage door bumping the door on my garage?
In fact, we've
Yeah.
had one of those repairs, and we took great care of them and got their car all fixed up. We've had that too. Yep.
Yeah. So that's another thing, another reason why people like this so much is because they completely separate it, right? Just like you separate your cable from your phone bill, you separate it. So what happens with us, it's just, stays with us. It doesn't affect your liability portion. It's just a smart way of doing it.
Yep. Because I know I got the mutual health sharing account. So
Mm-hmm.
this is like the health share, except with automobiles.
Yeah. Similar
Exactly.
concept. Exactly. Yeah.
All right, that's it. That's all I wanted to ask because yeah, I had that. We paid thousand and something dollars to out our pocket to
Oof.
repair the
Oh
car.
man.
And that was it. That was the dealer discount because I knew the owner of the
In the
dealership.
meeting.
Wow. Great question, Sheldon.
Yeah.
Awesome. All right. Anybody else before is Mike or Sheldon? You ready?
Looks like Sheldon's going to be up. Mike is
Yep.
not here.
Oh, you
Uh,
want me? Let me text somebody for them to get on. All right. Stan? What do we? Okay.
Well, you can do a real. We can do a real quick. Let's just start out really quick with ER3 if you want just a minute because
Okay.
people aren't expecting you to be on yet. So let's do ER3 for like 15 or 20 minutes, and then we're gonna roll with FICA.
Okay. Let me do that. I'm texting somebody to get on right now. So here we go. All right. Let me pull up the ER3 and so you guys can learn about this. So I know Alan, you don't know who I am. You may have seen my name on the Zoom. Me and Andrew, we've been knowing each other for how many years now, Andrew?
more than a decade now.
Yeah,
So
more than a decade. Yeah, like 12 years, something like that.
yeah.
So we both come out the financial services industry. Um, I was an electrical engineer for 22 years. I have an MBA. I am I had a Series 7, I parked it. I have a Series 65, and I've been in the industry for 30, I've been licensed 30 years. That kind of shocked me when I looked at that. I was like, holy mackerel, 30 years? Yeah, I'm about to turn a year older on Monday. I'm pulling this up as I'm talking to you guys, so just to let you knows some stuff about me. So I'm a contrarian. I'm always looking for things that the masses don't know. So Andrew, you know, I talked to my wife about this, and you know, for the good driver, she was like, she works at a law firm, and she's like, oh no. But I have a car that is a 2015 that's totally paid off, so you know, I'm going.
You can sneak try 6 months, Sheldon.
Yeah, that's what I'm thinking. I'm going, okay, because we're about to make some gigantic payments for insurance this month and next month. I'm talking about thousands of dollars of money going to insurance. It's all right. Let me see, make sure this is
you owe me a car, so we'll grab Sheldon's.
Yeah, yeah, thousands of dollars. It makes me sick at the beginning of the year. How much money? Okay, Andrew, I got mine up, so I will share the screen so you can see the ID side. I'm going to be doing the ER3. So here's what ER3 means: Enhanced Roth Reinsurance Retirement Plan. And here's something right here, which you're talking about insurance companies. I got some books on insurance. Okay, you guys can see that, right?
Yes.
Okay, so I'm going to tell you this real quick. Insurance companies are some of the most profitable companies in the world. I mean, they are the engine behind the country. They're basically a bank. They have to loan the money out for the assets. For every dollar in liability they have to have a multiple in assets. So that's why these insurance companies get these premiums, and then they go out and they buy apartment buildings. They buy, they loan money to construction companies. They buy fleets, transportation fleets. They own a lot. They own some of the largest buildings in the United States. They're owned by insurance companies, and most people don't know that. So what the ER3 plan is, what it does is it says, hey, let us show you what Warren Buffett has been doing for a long time, Lloyd's of London, where if you're the right business, we can create the same strategy that an insurance company does, where you can build wealth and minimize liability. So I'm going to play some of this right here. So, oh shoot, let me do this. I better stop the share. So when I go on to the share and I first do it, I got to make sure I do the sound, because I did not do that. And you would have been seeing a blank. You wouldn't hear anything. All right, got the sound. So I'm going to click right here.
Hello, and welcome to this short presentation. It's going to be interactive, so you'll be asked to click your screen from time to time to see only what you're interested in seeing. And no matter where you are in the world, we believe you may one day look back at this very moment as a turning point in your life, because what you're about to see could turn your business risk into a long-term, super-funded, tax-free retirement plan. Introducing the ER3 plan, a strategy that lets business owners turn underinsured risk into tax-deductible premiums and grow that money tax-free inside a retirement account they control. More on that later. But before we dive in, let's tailor this experience specifically to you. Which of these best describes you?
So I'm going to say I'm a business owner.
Great. This walkthrough will focus on how the ER3 plan can help you reduce taxes, control risk, and build tax-free retirement wealth from your business. Starting right now, you too will know the strategy used by Fortune 500s, financial pros, and high-earning businesses to grow your income with the ER3 Reinsurance Plan. So let's get started. Here's where you choose where you want to go. Click the topic you'd like to explore. Then finish up when you're ready.
Now, when I talk to people, they've never heard of private insurance. So here's the first thing.
Great. A private insurance company is exactly what it sounds like. An insurance company owned by you, not a third party. In this $800 billion industry, private insurance companies are formed to cover uninsured and underinsured risk that traditional P&C insurance policies don't adequately cover, while giving you control of the relative premium. It's designed to cover self-insurable risks that could occur, and if the policy is needed to cover an insured risk, the net premium is available to pay any claims. However, if no claims are made, the net premium becomes net profit to the private insurance company, which is then paid as a dividend at the end of the policy term. And since the private insurance company is owned by your Roth retirement account, the dividend is not taxable and can be reinvested by your Roth retirement account in your sole discretion in other investments, which can be distributed to you after age 59 and a half, tax-free. For businesses doing at least $500,000 in annual gross revenue, this structure opens the door to a powerful combination of risk mitigation and long-term wealth accumulation and transfer. Here's how it works. Your business pays premiums to the private insurance company owned by your self-directed Roth 401k plan, giving you total control. These premiums are a deductible expense off your P&L, reducing your taxable income. The funds are then held for potential claims, and if no claims are made, the premium is paid out as a dividend into your self-directed Roth IRA or solo Roth 401k, where it grows tax-free. Fortune 500 companies and family offices have used private insurance for decades, even centuries. But the ER3 plan now makes it accessible to business owners like you. Our ER3 plan is designed for companies with annual earnings of $500,000 or more, offering full IRS compliance, a domestic structure, and third-party actuarial-based numerics and claims support. Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
So I'm going to go to the history.
Private insurance has existed for centuries, long before commercial carriers. It began in the 1600s at Lloyd's Coffee House in London, where merchants pooled funds to protect shipping routes and whaling vessels. That model evolved into what we know today as Lloyd's of London, a name you're probably familiar with. In 1752, Benjamin Franklin helped establish the first American private insurance company, still in operation today. In the early 1900s, America was booming with steel, steam, and sweat. In places like Youngstown, Ohio, the steel industry was rising fast. But so were the risks. Railroads derailed, steam engines exploded, coal mines collapsed, and no insurer would touch them. So, the moguls of the time, Carnegie, Rockefeller, and Ford, didn't wait for help. They quietly started self-insuring when commercial options were unavailable or too expensive. By 1955, a property protection engineer named Frederick Rice gave this model a name, captive insurance. And in 1962, he took it global, launching the first offshore captive in Bermuda, and private insurance has quietly backed some of the most powerful companies in the world since. The private insurance industry is experiencing a 12% annual growth rate. Can you guess what that industry is worth today? That's right. Private insurance is now an $800 billion industry. And thanks to the structure created by Alliance Reinsurance Company Incorporated, it's now accessible to smaller, successful businesses like yours. Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
I'm going to say, why create an ER3 account?
Great question. Most business owners are already overpaying to be underinsured. Traditional policies leave gaps, limit coverage, and give you no control. With a private insurance company, you can cover overlooked risks, deduct premium payments, and redirect unused funds into tax-free retirement income. It's not an added expense. It's a more innovative way to reallocate money you're already spending, turning liability into long-term wealth. And unlike traditional retirement plans, this structure isn't limited by contribution caps or market performance. So, who qualifies? Some perfect examples are high-risk or high-margin industries, such as construction, healthcare, energy, cannabis, finance, and many others. But this is not an all-inclusive list. If your business generates $500,000 or more in annual revenue, this structure may be one of the most powerful wealth-building tools you have at your disposal. Still not sure if this model works? Well, 75% of Warren Buffett's wealth is tied to insurance and reinsurance, just like you're seeing here. He's called it a 52-year love affair with a low-risk investment. When the world's most significant investor builds his fortune around this strategy, isn't it worth a closer look? Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
So let's look at some risk examples.
Every business faces risks that aren't covered by a standard policy, and these can lead to lawsuits, staffing losses, missed revenue, loss of control, or even bankruptcy. Have you ever bought an item and been asked if you wanted to add an extended warranty? Well, there's a reason why. Did you know that 90% of auto dealers use reinsurance to manage extended warranties? And they aren't the only ones. Electronics, appliances, retailers, manufacturers, administrators, and warranty specialists use reinsurance to manage risk and increase profits too. Many car dealerships and service providers offer reinsurance as part of their services because they understand they can deduct the expense directly from their top line, and that reinsurance generates a predictable revenue stream. What if we told you that this revenue stream could be structured so that the revenue is funded into your private retirement plan? This plan would allow you to superfund your retirement. Best of all, if distributed after the age of 59 and a half, it will never be taxed. Would you be saying, how do I get started? With the ER3 plan, a third-party actuary, important, works directly with you to identify insurance risk exposures and price them using real data. Then you decide how much to insure and how much premium to redirect into your own structure. If there's no claim, the premium becomes tax-free income after being redirected into your retirement. You're not just covering risk, you're converting it into value. Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
Now I'm going to give you an example. Out of every dollar paid for extended warranty, here's what Craig and his group told us. These are the guys that we work with for the reinsurance. 30 cents out of every dollar is a claim. So what that means is the reinsurance company, their company has a 70% profit margin. 70 cents goes to profit. So this goes perfectly with what Good Driver is talking about. And then what happened to me, I had an extended warranty where I paid $2,200 for when I bought my car, and that I rolled into the payment. That doesn't include interest. I had a claim where a fuel injector stuck open, and the extended warranty, which was sold through my credit union, only paid $250. Paid for a part and an O-ring. So what does that mean? They made over $1,900 off of me, and then that didn't include my repair. When I added my repair to it, I was up to $5,000. So I might as well not have bought the reinsurance. So that's how profitable this stuff is. So I'm going to go over some actuarial samples.
Every ER3 plan starts with actuarial science, not guesswork. An independent licensed actuary reviews your business's financial operations and existing coverage to determine what's really at risk. It's not a one-size-fits-all. A law firm's risk looks nothing like a manufacturer's or surgeon's risk. That's why every plan is tailored specifically to the client. Here are some examples of what businesses were able to insure and redirect. A healthcare practice grossing $1.2 million was able to deduct $189,000 in tax-deductible premiums. A large clinic grossing $5.5 million expensed $581,000 into tax-deductible premiums. A pain management group expensed $1.2 million in premiums. A dental group that grosses $8 million expensed just over $1 million in premiums. Those dollars were deducted as expenses and earned out as tax-free retirement dividends, less any claims. If you're overpaying on taxes and undercovered on risk, this model gives you the edge. Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
Let's do the numbers. Let's do the numbers. What do my numbers be? And then we're going to go into...
Great. For you to see what your numbers could possibly look like, please enter your estimated annual gross revenue.
I'm going to use 10 million.
thank you, based on the gross revenue provided, this is how much you could potentially deduct from your income for additional insurable premiums. And based on a typical client's private reinsurance company expenses, this is how much could go straight into your Roth IRA at the end of the year. So you get to deduct the premiums from your top-line revenue as a business expense. Remember, gross revenues less expenses determines your tax basis. Then the net profit of your private reinsurance company is available to be distributed to your Roth 401k or solo 401k as a tax-free dividend. Starting to see why business owners everywhere are loving the ER3 plan? Go ahead and choose another topic to learn about, or click Finish Up when you're ready.
I'm going to say finish up right now.
If you're ready to see how the ER3 plan could work for your business, here are the next steps. Step 1. Initial feasibility conversation. Initial conversation to determine if your business qualifies for the ER3 program. Step 2. Establish or convert a self-directed Roth IRA or solo Roth 401k account. You'll need to contribute or roll over a minimum of $50,000. Step 3. Direct your custodian to purchase preferred shares in the ER3 program using those funds. Step 4. Complete a brief interview with a third-party actuary. They'll review your business and determine which additional risks are insurable. Step 5. Send your deductible premium to a licensed unrelated insurance carrier, which is where the structure becomes active. Step 6. Each year, if no claims are made, surplus funds are reinvested back into your Roth IRA or Roth 401k tax-free. And the best part, we walk you through the entire process. Fill in the information to schedule a 30-minute discovery call. We'll walk you through how the plan works and what it could mean for your specific business. We'll also cover what risks you may have, how premium funding and tax advantages apply to your business, and what setup would look like based on your goals. This is the simplest way to get clear, expert insight and to see if the ER3 plan is the right move for you.
All right, Stan, what did that White Shoe law firm say about this?
The White Shoe White Shoe law firm was very impressed. They've seen numerous strategies, but they never saw anything that was quite like this one, and I'm going to use the term quite as well buttoned up, where all avenues were looked at, all consequences were viewed, and it had everything going on, and they're like, hey, this looks pretty cool. The only thing that they were a little concerned about is to make sure that when advisors were talking about it, that they weren't making any false claims, which we understand, and we're going to do a little certification, and they said, we're in.
Yep. So I am bringing up our blacks, the FICA payroll tax. That's what you want me to do next. Am I correct in saying that?
FICA chips. You might have some questions on what we just saw. Let's ask if you have any questions. Go ahead.
Okay. So if other people are coming in because they had heard about this, that we've been talking about the reinsurance or private insurance, and they wanted to know if they could move it or tell other people about it. How are they making their commission? What's the commission on it? Because I've never heard that on all these ones we've listened to. I didn't have a thing to tell them.
Oh, how do they get paid?
Yes.
The representative?
Right, like an affiliate or a representative.
Okay. Let me, because we got a calculator for that too. Let me bring that calculator.
No license needed.
By the way, are you a guitar player?
You can see all the guitars, right?
We have a calculator for everything, and Andrew, you are correct. There is no license needed.
Not just your Zoom background, your green screen.
Yep. Yeah, that's my background. That's my wall. All right, so let me bring it up right now so I can bring up our calculator. Here we go, Black Swan. And then you guys can see the calculator on the unicorn. I just want to make sure that's the right one. There it is.
Or more.
It's the right one.
Yep, and the concept behind all of these, Donna and Shannon, I think you folks already know, is that Black Swan BSBA, we pay out how much to the field? Andrew Wong, this is a quiz. Don't fail it. Don't fail it. How much do we pay out?
We pay out to the field 70%.
70%. That is correct. Okay. We pay out 70%. So, okay. Why don't you pull up your calculator there a minute?
You see it?
Oh, yeah. Go ahead. You guys go over it.
So on that example, we said $10 million, right? $1 million in premium, which you see in the yellow in the Excel spreadsheet. Then go all the way down to where it says first year underneath the assumptions. Because what we do is we believe in being transparent, so you can see all the fees and everything. So our payout is based upon premium. And then what Stan Black Swan gets, they pay out 70% of what they are paid. So here's what the primary referral agent or consultant will get paid.
Agent. Oh my God. I didn't say it. That was on Sheldon.
Out.
That was on Sheldon.
Please forgive me for the agent, consultant profanity. $25,948. That's how much you will get paid on a business that does $10 million. And then on average, we say $1 million in premium. You'll get paid $25,948, almost $26,000. And then let's say we pay 3 referral consultants down, referral partners down. Your first level referral partner did the same thing. You'll get paid $3,175, and then they brought their referral partner in. They did the same thing. You'll get paid $3,175 on the second level. And then they did the same thing on a third level referral partner. You'll get paid $1,587. Now, the cool part about this program, every year they pay their premium, because for some of you have done annuities, some of you haven't. Usually annuities pay these really big pops. It's kind of like real estate. You sell a house, you get a big giant pop, and then you got to go hunt for the next house to be sold. With this program, long as the business owner is paying their premium, you'll get paid again the next year, $23,198. And if let's say they pay the same amount of premium, what Craig said on average, Craig is one of the key people for the reinsurance company. He says on average their clients are in there for 15 years. So if you catch somebody early in their career, you'll get paid $23,198 until they stop paying. We said in this example, over a typical client lifetime, we said 10 years, you'll get paid $257,924.
Nice.
And this strategy works for a minimum of $500,000. It can go, Craig says in reinsurance companies, $1 billion. So you can imagine that the numbers can blow your mind. When we add this to ER3, so when we add all this stuff up together, this is why Stan and Stephan's company is Black Swan Business and Business Advisors.
Gotcha. So Sheldon, this is Shannon. We heard that you have a silver tongue, amazing one-liner elevator pitch for this product that we've been waiting to hear literally for a little while.
All right, Mr. Black Swan, hoity-toity, white dude. Yeah.
Hoity-toity, thank you.
You and your Newport Lot Yacht Club. Oh, my gosh. Go ahead, Mr. Hoity-toity. Go ahead.
Okay, so here's what I ask people. People say, "What do you do?" I say, "Well, I show businesses how to make money by saving them money," and I did that on Thursday night, and I said, and "You may be wondering in which ways," because I already know what the questions are going to be. They say yes. I said, "Well, here's one way. Have you ever heard of a privately owned reinsurance company?" They go, "What? What is that?" I said, "Imagine this. What if you can take your business and professional liability risk and turn that into a profit center that can fund your retirement plan and build you wealth and also minimize your risk? Would you be interested in learning more about that?" You know what most people say? Because I was talking to a business owner at the restaurant because I was talking about FICA payroll tax savings. They said, "Yes, I would like to learn more." Because here's the other thing I said, we're all paying for risk. How many of us pay for insurance? All of us pay for insurance. And then the next thing I says, we pay for insurance hoping we never ever use it. That's the truth, isn't it? All of us. We hope we never use fire insurance, a car never gets broken off, I hope I never go into the hospital. So that money is gone. I said, what if we can make that money stay with you and build you wealth? So Donna, did that? I know I made it simple. Did you?
Yeah,
how did that sound to you?
I'll ingest it all again. And
what was the first line you said? Because I couldn't get my recorder on fast enough.
I like when you say tax. Have you ever heard of a tax unicorn? What?
Yeah, because I'll say that too, tax unicorn. I'll add that in there because depending on where I am, it's like, because they say, what's your business? It's, Black Swan Business and Financial Strategist. That's the name of my business. And then they go, wow, Black Swan, that's beautiful. That's what people normally say.
And they go, what's a black swan?
Yep. And then they say, what's a black swan? I say, I turn it upside down. But have you ever heard of a tax unicorn? Because tax unicorns, and then people say, I say, it's a tax unicorn. Wow. So if you want to, I put a script together and I sent it out. Stan, you can send that out. You still got it, right? Stan?
I think I have it somewheres in the many things that I have.
Well, I can resend it to you. So did that help you a little bit? Because from a concept standpoint?
Well, Sheldon, future forward for you, you can say, I am the beautiful black swan. Part of the...
Okay.
The black swan and the tax unicorn hang out together.
Yeah, they do. All right, so I'll stop the share on that one. So it's a lot of money to be made. So now what I'll do is I will go into sharing the FICA. I got my back office pulled up. Let me pull up the FICA website because I got my back office.
Good. We're going to go over the site. We're going to go over the basic program for folks that are just kind of coming on. So you get to see it. And then Mr. Black Swan, Mr. Hoity Toity from the Newport Beach Yacht Club is going to show you what's going on in the back office with marketing materials because he's the man. He's really good at it.
Yep. So let me do my share right now. There's my Zoom so I can share with you. Click on that. So here is share that and go to the FICA. All right. Can you all see that?
Yes.
All right, cool. So here's the cool part. When you fill out your paperwork correctly, let me repeat that. Fill it out. Do this, please. When they send you the contract, use the ink pen and go line by line, because I have one of my guys who was honest about getting him his contract and he didn't fill out some things. So make sure you fill it out correctly. When you do fill it out correctly, and Stephan Clark's he's going to be the quality check, make sure everything is filled out. And then what's going to happen, Stephan is going to send you your replicated site. This is what you will be getting. you will get a replicated site just like this. You can see recover billion, recover, you can read it. You see what it says. Here's the cool part. We don't even have to talk. We say, hey, I always say, did you know? Because this is what I asked the restaurant owner. And then I want to click on this because I was out in the field doing some actual talking to people. Restaurant owner found out they do $4 million a year in income. I said, are you familiar with the FICA tips tax credits? They say, what? I said, you may be owed hundreds of thousands of dollars and you don't even know it. Then I got their interest. And I said, you know, with the new payment systems and everything, they integrate tips into the payment. I said, you are probably paying you're paying taxes on tips that you should not be paying. So that got their head spinning. So that's the way I opened up the door with that. So for all of us, when we get this replicated site, which we can send to the business owners, email them, here's right here what Stephan put together. I'll click it.
Quick question.
Oops. I probably didn't put the sound on this one. I know I didn't. But what'll happen is there's a video you can watch.
I heard it.
Oh, you did? All right, excellent. All right, thank you.
Are you still paying payroll taxes on your employees' tips, even though your customers paid those tips directly to your staff?
I'm crushing it on tips. Why does that feel like a penalty?
Because high tips can mean higher employer FICA, Social Security and Medicare, on those tips. Here's the silver lining. The FICA tip tax credit, also called IRS Section 45B. If you're eligible, you can claim a credit for the employer share of FICA paid on certain employee tips.
And here's the part that hurts a little. Many businesses never claim this credit. Some industry estimates say 80 to 90% miss it. And the median refund reported in some studies is around $101,000. Your results depend on your numbers.
If you're in the restaurant and hospitality industry, this credit has been around for a while. And with recent law changes, many beauty and personal care businesses may qualify too.
Simple version.
You take eligible reported tips, apply the employer FICA portion, and that calculation can become a tax credit.
Time matters. Refund claims are generally limited, often 3 years from filing or 2 years from payment, whichever is later.
Legacy Tax and Resolution Services handles the heavy lifting, reviewing tip data, calculating the credit, and preparing the right filings. Want a quick estimate? Use the calculator below, then complete the survey to the right and book a call.
So that's the video. You can ask the restaurant owner, hey, could you spare 2 minutes and watch a quick little video? I'm going to send you a link. It has a video on it, and they'll explain it to you in 2 minutes. How many restaurant owners or business people can spare 2 minutes? And then they'll look at this, and then it gets their interest. Now, Stan, I know we made some differences. Oh, yeah, here's the calculator. I'm going to go down here. So, right there, here's where I'm going with this. This is your website. You'll get this information on it, and you can send it off to people. Now, let's do this. Stan, let's put some numbers in the calculator. What do you want to put in there?
Well, we like to use Jim Quinn's example. I think Uncle Dan remembers that. Uncle Dan, I'm going to pick on you. I don't know if you can unmute. Why don't you lead us through this one, okay? You remember Jim's examples.
Yep.
Go ahead.
He went to a high-end restaurant. It makes a difference, you guys, because high-end restaurants have high-end tabs. They had put 25 employees in there, Sheldon.
Okay, 25. Let me see, back it up.
Okay, and then it changed the average hourly wage to $5.15 the max.
Okay, $5.15. Okay, I'll do that. Back it up. 5.15. Okay.
Okay. Now, this is the interesting thing. The owner of the restaurant said that their average weekly tips is $1,300, not $250.
Okay, put 1,300.
Okay. All right. What does that number come out to be?
$129,285. Now, is that for 1 year or is it for multiple years?
Sheldon, play along with me, sir. This is for approximately. This is for 2025. How did your restaurant do for the past 3 years? Did you have similar numbers?
Yes.
Well, if we take the similar numbers and we add another 3 years to this, you're talking right around 500 and what, 16,000, maybe 17,000, 500. Now, out of that, we're doing all the heavy lifting because most likely your tax professional is not aware of this, but even if they were aware of this, this is kind of complicated. We've been doing this for a while. I'm talking about Stephan. So, they would have to dig down deep, try to figure it out. We're right in the middle of tax season right now. If you want to, wait a long time to get this money, or you want to deal with somebody that does it all the time, what are your thoughts on that?
Hey, I will go to the other professional who can get it done faster.
Great. So basically, if we're talking about that type of money, the tax attorney or the tax firm, they charge 30% recovery of whatever they recover for you. So that being the case, can we go over to the other calculator, Sheldon? Do you have that one?
No, we need the calculator for the consultant pay. He's referring to the consultant calculator,
yes,
okay?
Oh, the consultant calculator for how much?
FICA consultant.
I'm gonna give you that number based on, what was it, 129, 285, 285. Let's see here. The 4-year number I'm gonna give you.
Have that one pulled up, FICA calculation for the consultant. Sheldon, do you have that?
Let me look. It's not in our back office, is it? Let me see. I don't think
Andrew has it.
Yeah, I don't know if Stephan sent me that calculator.
Andrew has it. You have it, right, Andrew?
Andrew, got that calculator?
Yes, I'm
pulling it up.
I was muting myself here, but
okay,
yes,
I'll stop the share and let Andrew take over and pull it up.
I'll bring it up.
We're going to let Uncle Dan lead this training. He's good, too. He's getting really good at this. I like it.
Man, what I'm telling you guys, I'm just practicing. Really is what I'm doing. I've talked to one business owner. I got to get back to him because I didn't have the correct link, but I just gave him an estimate. I said, if we can bring you money that's yours, that you don't know about. I don't have the calculator with me. It could be 100 grand, 50 grand. I don't know, but I'll get back to you on it. And so we're actually going out to the restaurant. Me and a couple people on my team, we're going in here in Vegas. And if you guys are in one of those states, it's going to be about 30% less. But so what? After you take a look at these numbers, you got
I got it now.
Okay, all right, cool. The amount.
Yeah, make it a little smaller so we can kind of see it. That part, it's so big we couldn't type it in the end. There we go. Go ahead. How much is the amount, Uncle Dan?
517,140.
Andrew, 517-140.
Hold on.
All right.
517
140.
140.
There it is. That's 51. Yeah. Yep.
There we go.
So
80 grand.
Let's take a look at this. Because they take 30% that goes into the company, they pay out 70% to the grid. And so what that does is once they do that, if you take a look at the first year commission for the rep that actually took the 30 minutes it takes to talk to a restaurant owner, his commission on this thing is $79,794.
What?
Yes.
It can't be right.
Yes.
Wow.
Now let's assume that is I'm going to take somebody on here. Let's assume this is Sheldon that wrote that deal, right? Sheldon was sponsored by Andrew. So Andrew, his override on that would be $763. And I sponsored Andrew, so mine would be $9,763. My sponsor is Stan Shaw. Stan would make $4,880. Not bad for one restaurant with 25 employees. But again, the key to this, you guys, because this is all training, because once I saw this, I was like, oh my God. Stan talks about, this is a land grab. I can tell you this. I know of 3 other companies that are gearing up to do what we're already doing. It's going to take them probably about 90 days to get up and running. So our opportunity is, what you want to do is the high-end steak restaurants, seafood restaurants, high-end Italian restaurants.
What about Chuck E. Cheese?
No Chuck E.
Probably not,
Cheese.
huh?
No.
All right.
You take 4 people to a steak restaurant. That tab is going to be, $400 to $500, including, wine and drinks and everything. So you figure if say it's $500, if you take $500, the average, if they tip 20%, that's $100 tip right there. So that's why in this illustration that the average tips were $1,300 a week, because of the price of the price of the meals at a high-end restaurant. So my point is this: mark out the high-end restaurants in your area and make those contacts before everybody else is going to be doing this. I'm telling you, this is the next ERT, but we got a head start, probably about 90 days. So if you think you want to sit behind a computer and send emails and get out there. I'm telling you, they're going to want to talk to you once we have this. So, it's like Stan says, this is a land grab. Go grab that restaurant and make it the contact now, so that by the time everybody else starts coming in and they figure this whole thing out, they're going to say, oh, we're already working with Stephan, or we're working with Stan, or whoever it is, Andrew.
We're working with Uncle Dan. That's right.
It's
there
fine.
Yeah.
But again, now I one thing I want to address, because I know some of you are in California, and most of my contacts, or a lot of my people I work with, are in California. So I mean, if California is California, Oregon, Washington, Montana, Nevada, where I live, Minnesota, and I think there's one more state, because their minimum wage is much higher. It's like, in California, it's around $15. A lot of that tip, the way they do the calculations with the tip, a lot of that tip money is, it's already been part of the calculations because their minimum wage is so high. But guess what? So we figured that if we just take 30% of the of what that is, I mean, take a look at the number. If you take a look at these numbers, all right, we got a high-end restaurant in San Francisco, 79, just say 80,000. 3 times 8 is 24. So you take 24 from 80,000, that's 60. Gee, our commission went down to $54,000. I can live with that.
Oh, that's it, Uncle Dan. I can't. What fifth? Oh, no way am I going to do that.
I can live with $54,000. I'm just like, first, we were like, man, it's kind of messed up in our state. Then the light bulb went on when I saw Jim Quinn do this last week, and he told them this is a real restaurant, by the way, you guys. This is not numbers we're just throwing in there to get you excited or nothing. This is the real deal. This is an actual case, an actual restaurant. I mean,
now, Uncle Dan,
yes, sir.
let's take a look. Let's take a look at another one.
Uh-huh.
Another one of our agents, her son owns how many restaurants?
21.
20 restaurants, 600. Let's go back to the calculators a minute. 600 employees. Can you go back over there, either Andrew or either one of you folks is good, okay? But if we go back over to that one, and take a look at the numbers of what we're looking at, it's pretty crazy. If we have a minute, if we don't, it's okay. Not a big deal. I know Andrew doesn't have the calculator. Well, Andrew does, but Sheldon doesn't.
Yes, I do. I got the calculator too. I found it and I loaded it up.
Okay, so very good. So whoever can make
okay.
sure.
You want me to load it? Okay,
load
let me do that.
Look at that other example, Uncle Dan, because we want people to really get excited.
But you know what, too? This is great on the big numbers, but there are going to be restaurants that are not this big. But the amount of commissions, I mean, are still more than you can make on doing most things, even if the commission is, only $10,000. Come on, think about it.
I think I'm paying out too much, Uncle Dan. We got to have a talk. We got to lower.
Yep, only $10,000. Hey, we got Mike on. Hey, Stan, we got Mike. I see he's on the call too. So, all right, let me share it with you real quick.
Okay.
Here is the FICA right here. All right. All right, you can see that, right?
It's coming. There it is.
Yep. So how much, what did you want
to? They had, I think they have 600 employees.
Oh, okay. Oh, I'm on a calculator. You want me to pull, you want me to do it on a calculator?
FICA. Yeah.
Okay, I'm on FICA. Let me see. Where's the employees on here? I'm on. Oh, okay. I know what you're saying. I know which one. I'm going to go back to the website. That's what you're asking me. That's what we got to do. So, all right, I will get that done right now because I still got that up. Stop the share. Go to the website. Here we go, and it is.
And let's adjust it down to say only $250 a week in tips. Just to say it's not a high-end restaurant.
Okay.
Just see what those numbers look like.
Okay, let me do that here.
A lot of times you get excited when you see, presentations and, they give you these high, great numbers. And, I like to see what just the regular type of restaurant. If I got one of the two of these or three of these, the money is still decent.
Okay, 600 employees.
Uh-huh.
Oh, that's beauty. Let me go back up here.
Yeah.
600. Okay, enter.
Okay, and just go down and change 1,300. Let's just say $250 a week. Let's just say they're diners or something like that.
$596,700.
That's over. Wow, that's over $500,000.
Yep, and that's for 1 year.
That's for 1 year. Oh my God, I forgot about that.
Yeah, now it's going to be what's that times 4?
596,400,000.
So it's 1.2. It's 2 years.
2 million. It's about 2,400,000 approximately.
I'm gonna tell you what it is. It's
2.3.
2.3 million.
I want you to pull up your other calculator. You know the one, the agent calculator. Sorry, Andrew. Jesus, you got me.
GS1.
Damn, you got me.
Okay, so you want let me pull out that calculator. So it's going to be 500. What was the total number? You guys have the number. So what I'll do is
$2,386.
Okay, I'm going to
$800,000.
All right, here is the FICA tips calculator. And right here, that number is, all right, come on.
2,386,800.
$2,386,300. Right? 800. Let me make sure I got that right. 2,380,000. Yep, that's correct. 2,386,800. Yep. Let me enter. Okay. 379,744 for the primary referring agent. First level, 46,465. Second level, 46,465. Third level, 23,227.
Uncle Dan, I have a fainting consultant in my office.
Well, you know what's interesting about this? Everybody on here, if so now we know the number just for an average restaurant. I'm not even talking about high end. So if you want to make, this is almost $400,000. If you want to make 379, 400,000, you need about 600 employees at average restaurants, not the high ends. So now we got a goal to shoot for, right?
Yep. I do know a restaurant owner that has about 200 to 600 employees. He's part of my, okay, Stan, I'm about to say it, my hoity-toity Commodores Club.
Well, I'll tell you something. I'm actually, it's my birthday, and my cousin from Hawaii's parents are here, and we're all going out to dinner tonight. He is part of a restaurant group here in Las Vegas that has 1,100 employees. I think they got, I don't know how many restaurants, but a lot. On the strip, most of them. And, you know, it's great. I told him a little bit about it. He said, send me the link, but I've tried to do stuff in the past. And I'm just going to be transparent. The larger the company, the CFO is, you know, just one of those CFOs that is the type of CFO that's trying to figure out how to go around us.
Yeah.
And that's that type of CFO. That's why he was hesitant before, because he knows the CFO. So, you know, if it happens, great. But I'm saying that to say it's great if you got one of those, go for it. But we got so many little fish like Jim Quinn's restaurant at 25 employees, and you make almost $100,000. Come on.
Yep. You just have to have those strategic relationships. So that we can help the smaller restaurant owners, because those are the ones like this Woody's Wharf that I was at. I see Karen has her hand up.
Yes, thank you. Quick question. So, Uncle Dan, you mentioned 25 employees. So they're not servers. You're just talking total employees for a restaurant. Am I correct?
So that's what Jim Quinn's number when he asked the restaurant owner how many employees he has.
It is servers though. Just that's it doesn't count for like cooks and stuff like that.
So
servers, bussers, people that normally will get tips. Busboys, servers, Karen, just so you know, it's not, you know, not including the, you know, chefs and other stuff. How many?
Of course,
they have
just
the servers.
People that are getting tipped. Okay, thank you.
Yep.
Somebody said Shaquille O'Neal knows me personally, huh? All right. Hey, that's great. Hey, that's cool. You can get in front of him. Hey, more money.
Really good. And can you just pull up the back office? We want to just show people quickly where that marketing material is.
Okay.
Let's just kind of do that, and remember what Stephan told you, how to get the link and all the other stuff. So you're Mr. Technology, you know, and hoity-toity.
Yep, hoity-toity technology. Yep.
Yeah, that's you.
You crack me up. All right, let me go to the back office because I have it up. Let me see, where is that? There it. When I click on this, then I'll go to my back office. You guys can
Yep.
see.
So once you send in your agreement, hopefully fully completed, not with people. Oh, geez, another call. Not with people leaving their names off and all the rest of the stuff. Okay, that I have to fix. Once it's complete, what happens? You receive a link, and I basically ask you to fill it out. It's going to ask you how do you want to get paid, some basic information, bank account information. Well, that's usually on your other one. And then I'll send you a link, and you fill everything out. I accept it. I bring you in, and this is your back office. Take it away, Sheldon.
Okay, so you all can see that, right? You see it?
Yeah.
Okay, so here's the back office that you'll get. Welcome to our affiliate program. How does it work? Like I said, this is going to be fast because I know we're bumping the top of the hour. So you get this, and then what'll happen is go to manage account. And then once you get on manage account, you can see total transactions, unique visitors. But what's most important to us is, right now we want to get out there and start marketing. So here's marketing materials. And what we'll do is they got some QR codes on there.
Hi, Alfredo. So,
what are you doing?
Okay.
Hey, Andrew, Theodora is chatting.
Bro.
All right, so we got QR codes. Now check this out. Let me shrink this because this thing is in my way right now. All right. Let's go on this QR codes because you can put the QR codes. It's going to be yours on your material. So if you know how to go in and your brochures that you get, if you know how to do it or someone else, you can go in there and this will be your personal QR code that you can put on your marketing brochures, flyers, business cards, and your website. So this is the way they'll track it to you. So that's one right here. You can see it. You can even put they even have your URL because a lot of people use their QR codes today. There's even one for email link. You can see all the different programs Stephan has, and I'll go right here, click on that, display email links. And you can use this in your emails. You can put that in there, and then you send your email out, and it tracks it directly to you. Because a lot of people are saying, how does it track it to me if I send it out? You can have this on, like I said, you can see it's in your plain text emails using the HTML format. You can copy that into your email message. But
no, he said not to do that. He said just use the ASC11
the
text.
ASCII.
Yeah,
Okay.
that one.
Okay. So you can do that. You can put that in there. And that right there will track it for you all. Because once you get in your back office, you can, like I said, you can use this, you can copy it. That's what I usually do, copy and paste it into my emails. And then he even has PDF marketing brochures. And as you can, I'll show you the combo social media posters. You see that, Uncle Dan?
Yep.
All right. Look right there, scan me. Because once if somebody pastes that yours in there, you can hand that out, and as soon as people scan it, it tracks it directly to you. And then you can put your telephone number and then you'll have your personalized website link in there. All right, let me go to the next brochure. And here's a food and beverage. You see that, Uncle Dan? You see it?
I can see it.
I see it. Yes,
Okay,
yes,
cool.
I see it.
Okay, cool. So the cool part, in your back office, you're going to have access to, different flyers. This right here, it's what changes is the face of the person. It's all the same information. I'll just show it to you super quick. There's food and beverage flyer number 1. You see food and beverage flyer number 2. The lady changed right here. Then you'll see food and beverage flyer number 3. And it's a different lady on there. But everything else is still the same. And again, if you know how to edit it, the PDFs, or you have somebody who can do it, you can go in there and then just put your personal links that they give us into these spots. And then what they can do is, you can put your telephone number, they can call you. And that's the cool part. So you can see right here, scan me, you have your personal QR code, just in case somebody don't know how to do that. And then what you'll do is you put your FICA tax tips. You can have your personal one in there. You have your telephone number, and then it'll have, it'll have everything right there. The FICA tax tip credits.com, yours in there. It'll link it straight to you. So I know Stephan did a lot of work, and we're focusing on the food and beverage. I know somebody who goes and some of the women get their nails done and they have pets. They could even click beauty and personal care, and you can see that right there. They even have that, but we're focusing on the restaurants first. But for the people who really want to go out there and hit it all, you could do that. And here's a black and white sample. This reminds me of Restaurant Week, what we had here in Newport Beach. All this delicious looking food right here. And then you can see this is a lot simpler. And he says the medium refund is $101,000, and get a quiet second opinion. Here's something that I can share with you real quick, what I learned this morning from Stephan, from me talking to some of the restaurant owners, this one restaurant owner, and also the yacht club. They think that I talked to a restaurant owner. I asked him about it, and he said he separated it, and he has ADP. And he said, oh, yeah, ADP is doing it. And then I talked to Stephan, and Stephan said, no, Sheldon, ADP is not doing it. What ADP is doing is giving the restaurant owner a report, where they're separating, their tips from their wages. And he told me and Stan this morning, that he went and talked to a lot of payroll companies when he first discovered this to see if they would do it. And the payroll company said, we do not want to take responsibility to be on the hook for this and mess it up. It's a liability to them if they do it. So they don't do it. So you may talk to a restaurant owner and say, we're doing it. In reality, they're just getting a report. So they can give that report to, I'm assuming they can give that report to their CPA if they know how to do it, and have them do it. But the payroll companies are not separating it. All they're doing is reports. And that's what Stephan, told me this morning. So when you're out there and you're hearing that, they're not doing it. They don't want to take the liability for it. Would I be right? You got any more input for that, Stan?
Oh, that was really good.
Yes. So
one other thing, Sheldon.
Yes.
I have a guy, so you guys don't know, and you probably, if you've been on the calls, I have a guy that has a contact on the cruise ships, and he was excited because, cruise ships, they have a lot of people. But after speaking with Stephan, the cruise ships take a dedicated amount and just charge that tip amount to the passengers. Well, that's not a voluntary tip. So cruise ships don't count because it's just automatically deducted from the actual company. So the way that bill was written, that will not count in the for this particular credit. So, like if you run across a restaurant that says we just automatically charge, 20% for large groups, that portion right there is not going to count when it comes. Now, if they, volunteer, they may only do that for really large groups or whatever. But I'm just giving you guys a heads up.
Okay.
Yeah.
That's good to know.
And Stephan told us today, Sheldon, remember that they're going to work at breaking that out. Okay, how much might be what Uncle Dan just said for the different, places. Let's say they're giving 10% to the cooks. Remember we talked about that. He said, "Look, I'm going to figure out how much is actually going to the servers instead of just disqualifying them because they might be giving a little bit to it." He's going to go above and beyond. He said, "I haven't seen any court cases, but he pushes the envelope in a good way where other people would just give up and throw in the towel."
Yeah, because it's a lot of restaurants. I know there's a brewery I go to, and I told him about this.
Yep.
And then he says he actually pulls, because that's what they call them. They pull them together. The front end and also the back end. They pull them together where they share in the tip. So that's why Stephan said he was going to figure something like that out.
Okay, and Uncle Dan also has another thing he wants to talk about. Right, Uncle Dan? What did you call me about? And how do I always answer the phone? Uncle Dan Helpline, what's your emergency?
Are you talking about what happened this morning?
What's your emergency? What was your emergency?
My emergency.
We can't hear you, Uncle Dan. You muted yourself.
You muted yourself. There you go.
When the gentleman went to his back office, he did not see all of the tabs on the left-hand side. He just saw I forgot the 2 tabs at the top, but they didn't show up. And I called Stan, and Stan had dealt with that. So in case it happens with any of you, when you first go into your back office and it doesn't show everything, Stan, where's that little arrow? Because I couldn't see it because I was on my phone.
Yeah, it's on the lower left, because I've got a Microsoft product that I use. I have Windows 10. And for whatever I don't know if it was on my laptop or the size or whatever it is, I couldn't see. I'm like, what the heck is going on? It took me like an hour to figure that one out. And I'm like, what the heck is this little arrow? Bang, I touched it. Everything showed up.
Right. Just in case it happens to you or one of the people that you bring into the business.
Don't panic. Hit the arrow and you'll see everything. It was all there. I just didn't see it.
Yeah. So you guys got any? I know it's 12 here in California. It's 12. Any questions? I know this was fast and furious. That's why on Wednesdays we have the call at 12 o'clock for FICA tax, the tip tax credit. Here's what I'm going to share with you guys. The best way to get educated on this is once you get your back office, go on there and play on it and get out in the field and start asking questions. I mean, just start talking to people. Scott, go for it.
Hey, I just mentioning that I checked through my emails. I haven't seen any links to sign up for this, either from you or from Stan. So,
okay, I'll send you. I think you got the. I'll send you the updated contract because I know I sent the contracts out before, and then Stephan made an update right before Christmas. I'll fire that out to you, so you'll fill that out and you'll just.
Yeah, I don't even have the latest ER3 contract.
Okay.
I don't know, it's the same contract or not, but.
Yeah, that one was done 12/23, so I'll fire that out. I didn't realize it. So you'll get that one right after I get off this.
I need one as well.
Okay.
I'm not sure. I just signed up. I just responded to the ad on Craigslist this morning, and I got the email to this Zoom today. I haven't spoken with anyone yet. I'm not really sure.
Uncle Dan, this is probably you're probably a descendant of Uncle Dan. Hi, Uncle
Well, no,
Dan.
probably Brian. Was it Brian Causey that ran the ad?
You know what? It was Brian. It was at the end of the email. It has Brian.
Yeah, I'm Brian's sponsor. So Yes, I'm Uncle Dan, and so what I can do is, if you can put your email in the chat, I'll send you the onboarding. I'll put your email in there, and I'm sending it out right now. David Gonzalez, you have the older version as well. I just figured that out. So I'm sending you the updated contract, and then I will get you ID. Okay, and let me get to the chat here. Okay, nice to meet you, William.
Yeah, I'm going to put my email in there. I'm sorry, I hit the return button and it didn't. It sent the chat instead of going to the next line. I was going to put my name and the email together.
Yeah, I have big fingers as well.
Yeah, big fingers, especially if you're on a cell phone. You know, can you forward your script? Yes, I can forward my script. I'll fire it out to Stan and Uncle Dan, so they'll have it.
And Andrew,
all right,
Andrew too.
And Andrew, yes, Anna. See, I want to say your name right.
Shannon. Andrew, yeah. So I need we need a contract for the ER3 as well.
And I have another.
All right.
Yeah. Also, Stan, please sign the contract and send back a copy to all the consultant.
That's the big boss. He's on a cruise right now.
Okay.
We figured we'd give him a couple of days off before he gets killed for tax season.
Tax season is about to slam.
Oh yeah, for sure.
Can you hear?
Yep. So, any more questions? Because like I said, it was 12:15.
Sheldon, can you hear?
Yes.
Okay. Donna has a question also.
Okay.
When it talks about they must, it's like a customarily, on the tip tax or tip employee, it'll say something like customarily receives more than $30 per month in their tips job. So apparently, obviously it's not just server, but when they're receiving a job, like if you are a server, technically you're taking an order. You might be an order taker if you're going to break it down, because you're talking about Stephan breaking it down, which I would want to break it down personally, because the one making the food, he's the cook. Okay, the one busting the table is a busser, but the one taking the order, and then you got a server, because restaurants that run fast, you have a lot of table change out. They'll get the food there while it's hot, because that's the most important thing. Can they both be a tip employee in that sense, or just the one server?
I couldn't hardly hear the question. What was I heard, could they both be a what?
A tipped employee.
A tip server employee, because one's taking the order, which is for the serving in general, and then the other one's delivering the food as a runner. So could it be an A and B?
Here's what Stephan said. Is it customary for them to receive it? That's the key question. Is it customary for a runner to get a tip? If not, and that's the key thing, what they'll look at. That's where he said it becomes pooled, and it becomes a polluted pool, because normally, who's customary getting the tips, that's what they look at, and that's what he was saying. He was trying to split out. So I know at the brewery, that's what they do. The people who do the tables, they clean the tables. The people in the kitchen, everybody in a brewery participates in the tip. The people at the bar and what are serving the tables, they get it too. So that's what Stephan is going to separate, because if the runner's not normally customary. Did that make sense? Did I answer your question?
If they weren't a customer, or if that's the way they operate in that restaurant, because the places that all they have
take that order and the food's already up because the things they put it in on certain things that you put the order in, they start throwing the steak down, the burger down, whatever. It's coming up as they're texting it in. Because it was a system that was operating and it did really well. So people took off selling it that we knew. But so it's just reminding me of that because technically it doesn't just not just the server. And there's an array of things. Obviously, when people are getting the food out in restaurants, they have a high turnover on tables, 8-9 tables an hour, and that's one server. So they only have time really just to get the order out. Somebody else brings drinks and somebody else brings food when it's hot because that's the priority, right? And it also says, because it's just saying, as long as you got 50 one night, 20 the next, you're getting what they're looking at, $30 more than per month in their tips job. Their job for claiming more than $30, I guess. Okay, is that correct?
I know that's getting into the weeds with this one, so we'll have to ask Stephan about that one.
We'll save that one for Stephan, and he'll be well rested when he gets back. So we'll whack him. We'll whack him with that one, girls.
Yes,
the only
that would be lots of fun. That would be fun.
I had a question on it because I put something in basic if somebody was looking this up, and as basic as I could put, and it said it started right off at the top. A tipped employee, such as a server, is someone who customarily regularly receives more than $30 per month in there.
Yep.
So it's like $25,000 a year is the minimum, or there isn't a minimum, or there's not a minimum.
Yeah, we'll hit that one. We'll hit that one with Stephan. A couple of things have changed, and he's the expert at that stuff.
Yeah, and I'm sure it does change. So
he's the expert. Yep. We'll hit him with that one. Do we have anything else here? I know Mike was on the call. He came in a little bit late, but we want to make sure he has a chance to talk. I think we're pretty much what we needed across, and I just want to remind everybody that we do these FICA tips tax. Try to say that 10 times quick. We do the FICA tips tax recovery meeting. What day is it on, Andrew?
Yes, we're gonna have on every Wednesday, 12 p.m. Pacific time.
Very good. Excellent. Very good. Okay. Now here I'm going to let you introduce our next speaker. He came on a little late, but we want to make sure he has a chance to kind of chat. So go ahead, Andrew. Introduce our next and final speaker.
Yes, absolutely. Like they always say, save the best for last. Featuring an undefeated monthly residual earner, Mike Hinsford, talking about the quantum health. So Mike, appreciate you on.
All right. Hey, you guys, appreciate it. No, I'm always learning, and I feel like, this is the closest thing I've ever seen to ERC that, in the past, because it'd be hard to say no to it, right? And I do believe with what Uncle Dan said, that it's there's timing is everything, you guys. The timing matters a lot, right? I was in late on ERC. I think most people were in late, and that was it's costly, right? So the best thing about it too is we're in early. So I think that's pretty exciting stuff. On the quantum, the big thing about this is that it's a permanent recurring monthly income, and it's just like FICA, R&D, and those kind of things. It's hard to say no to tax savings, right? To tax money that they didn't know they could qualify for. So I have I'm going to cut right to the chase, you guys. This is my mini presentation, but there's some brand new slides that just came out. There's a brand new presentation. So this is one of the brand new slides, but I'll be quick to the point on this, which is the quantum health benefit. What makes it better than the competition? 90% of the programs out there are self-insured. And so that means they're governed by ERISA. This is fully insured. That means it's governed by the Department of Insurance. And it's approved in all 50 states. So while the number one reason companies look at this is for FICA tax savings, the number two thing that's the most important to big companies, and even more important than the FICA tax savings, is the compliance, is the liability, is the risk involved. And so when you're fully insured and you're approved by the Department of Insurance, you remove a lot of the barriers and objections that people bring to these types of 125 payroll tax savings plans. And so Quantum can land the big companies that self-insured plans, have a hard time landing. And you can, so that's the big part about it. It's a fully insured supplemental plan. It works alongside, doesn't replace their current medical plan. It's not medical insurance, it's supplemental health benefits. There's no out-of-pocket cost to the employees or the employer, no out-of-pocket costs. And it will increase the take-home pay of almost all the employees. If it doesn't increase their take-home pay, by the way, they won't be on the plan. And the employer saves $600 to $900 per employee per year, which can be substantial, right? 600 employees is 60 to 90,000 a year, 8,000 a month in tax savings potentially. That's permanent. That raises the value of the business at no net cost, right? It's a no-brainer. And the carriers, just so you know, they just added Lloyd's of London as one of the carriers, but they have Crum and Forrester, 200-year-old A-rated carrier. Chubb is one of the carriers, and another one called ClearSpring, is another carrier. They have to have multiple carriers, so that's how they got approved in all 50 states. 90% of the companies are not fully insured. There's a few other fully insured companies. They're only approved in like 36 or 38 states. So this is all states available, and it's the number one plan on the market. It was the number one objection. You have to overcome it before they raise it. And you let me do the presentation for you. It basically was approved by the Affordable Care Act, an amendment to the Affordable Care Act in 2014, allowing employers to offer financial incentives to employees who participate in certain wellness activities. So that this plan, did not exist prior to 2014. The health benefits, I have a brand new slide on the health benefits. I like how they broke it out to where they have the family benefits over here on the right-hand side. So the family gets 1,100 prescription drugs. Prior to that, with like Capstone, it's 37, Champ, it's 200. They have telemedicine benefits for the whole family, including relatives who live at the same address, and the prescription drugs, no cost, no copay. And that's the whole family, and the pets. All the cats, dogs, horses, and more get 4 virtual appointments a year, but they get 1,000 a day if they're in the hospital. I was just updating a brand new iDecide presentation yesterday, and it was reminding me that the other plan, that one of the plans we represented had no indemnity benefits, and the other plan we had, Capstone, had $100 a day after the first day. And this is $1,000 a day for 30 days, and plus emergency room benefits, plus ambulance service benefits, plus critical illness accident benefits, and surgery, $1,000, right? $2,500 for critical illness. Those are mailed to the employee 8 days after they take a picture of their bill from the insurance company to the employee's house 8 days later. And then once a month, they read an article or watch a short video, 2-page article, 2-3-page article, 3-4 minute video specifically related to them and their health. So if they're quitting smoking, they get a different article or video than the person who's trying to lose weight or lower their cholesterol. So those are the benefits. The employee will see their check go up from $33.13 to $34.09. You guys, that's $100 a month raise. That's $1,153 a year. So you guys, if they have 100 employees, that's $120,000 extra to the employees a year. $120,000. But to the employer, $957 a year, that's $95,000 a year to the employer, and $120,000 to the employees. Net increase in their take-home pay from this plan. And it happens simply because the premium, which is deducted, which was taxable, is offset by the claim payment. And they have 6 different plans, but the claim payment's not taxable. The premium lowers their taxable income. In this case, it lowered it by $396 a month, their tax withholding, and it raised their take-home pay by $96 a month. So that's the bottom line, you guys. There's obviously 6 plans to include part-timers that'll get 30% more people qualified to participate in the plan than a one-size-does-not-fit-all program, which a lot of the other plans only take full-time employees. So that's more savings for the company, more income for us, because we get paid obviously per employee per month. The commissions are $12 to $18 per employee per month. $30 gets paid out per employee per month into the pay grid. So there's generations of overrides on top of the up to $18 a month on personal. And so on this case, 100 employees a month, you'd make between $1,200 and $1,800 a month. And so you guys, the average Social Security check in the United States, we're talking $2,000 a month. If you get 170 employees, that's the equivalent of the average Social Security check in the United States of America. 170 employees. And so here, you guys, here's a bigger, so they save, you guys, everybody in the world wants to save $8,000 a month. $8,000 a month, okay? Hey, would you like to save $8,000 a month if it was your company? If they have 1,000 employees, it's $80,000 a month, right? $600,000 to $900,000 a year. And you get paid $12,000 to $18,000 a month. $12,000 to $18,000 a month on 1,000 employees. That could be 10 companies of 100, 20 companies of 50. We just raised the minimum, or Quantum did, to 25 employees or more. However, there's an exception. Here's the exception. If you recruit a chamber of commerce to offer Quantum to all their members, within a chamber that offers it, they'll still keep it to 10 or more if it's within a chamber offering it to all their members. Not if they're just a member of a random chamber, but if that chamber they're a member of offers the Quantum health benefits, Quantum will allow every member of that chamber down to 10 employees or more to participate in the plan. So that'll help you, recruit chambers to be your partner for Quantum. And by the way, once you get a chamber in for any product, they'll add on, tax credits and everything else as well. They'll let you speak on those too. And so 10,000 employees is like game over. That could be one company, or obviously it could be, 10 companies of 1,000, or 20, 100 companies of 100. Okay. And so bottom line, this would pay you more like 150 to 180,000 a month. 150 to 180,000 a month. You guys, that's unbelievable, right? And so every employee gets an app on their phone in multiple languages. It's just like Aflac or Colonial on steroids. Every employee qualifies for all the benefits in the plan, the win-win for the employer and the employees. The IRS ruled with the Department of Health and Human Services and the Department of Labor that the employee can use the money any way they see fit. Obviously, they can use it for medical expenses, but they also ruled that they can use it to pay their mortgage or their rent. So basically dispelling the myth that they have to use it on medical expenses, because some of the plans out there try to trick them into buying a whole life policy or buying a policy with the savings and make them think that they don't tell them, actually, if you don't want the policy, you can keep the money. They just lead everyone to believe that they need to get the policy. And so I talked to the guy. He's like, we don't actually tell them they don't have to buy it. So we, basically, you guys here, we'd rather they have it to buy with whatever they want, their mortgage or their rent. Whatever, it's their money, it's the employee's money. And so here, we implement the plan. Quantum trains everyone in the all the employees on the benefits, how to claim how to file claims, how their paycheck goes up. That's their secret sauce. They get 100% enrollment out of the gate. They have 180,000 employees on the plan. 98 after 6 years, going on 7 years, 98% participation still, but it's usually 100 out the gate. So they manage all the new hires and fires and give them a report every single pay cycle. All we need is a payroll census or a register report or a journal report for one pay cycle. And then we'll come back and present them a proposal. The proposal will look like this. Is a real proposal for a car dealership, 219 employees, 182,000 a year to the employer, 833 average per employee, 1,112 average increase to the employee's take home per year. It gives each employee's before and after, how much their check goes up, and it's always going up. Okay, if their check doesn't go up, they're not on the plan. That's very rare. That's an employee doesn't make $375 every 2 weeks, which is like $700 a month. If an employee doesn't make $700 a month, they don't make enough. Or if they no, that's it. Otherwise, they'll be on the plan if they make over $700 a month, and they're paying taxes. This is what the employer saves. There's a $35 admin fee. I just recruited a superstar yesterday. Him and his wife crushed it in ERC, and basically their 125 they've been marketing charges $65 a month admin fee. Here, $35 a month. It's the lowest in the industry. So that's why they're netting so much more savings to the employer. Average $79, $75 a month and 39 per pay period after the 35 has been deducted. And then we show, so then bottom line, you guys, I'll finish with these 4 examples of real clients. And now on the Quantum site, they have testimonials. 122,000 saved, 183 employees. That would pay you $2,200 a month, more than the average Social Security. That's a small city. A real hospital in Tennessee, 396 employees, saved them 361 grand. That would pay you $5,700 a month, 70,000 a year. A private university, 2,000 employees, 1.7 million a year saved. You guys, that would pay you 36,000 a month. If that was 2,200 employees, it would be 40,000 a month. You guys, you need 10 million in an annuity, 10 million in an annuity to pay you 40,000 a month. It's crazy. You guys, to make even 500 a month recurring income, you need 125,000 to do that. If you live in a tax-free state, just paying federal taxes, you'd have to make 179 grand to get 500 a month. You need to make 1.4 million if you live in a tax-free state after paying federal tax to invest $1 million to get 4,000 a month. So you guys, you need to make, like, if you lived in California, you have to make like 20 million this year, pay your 10 million in state and federal, invest the other 10 million at 5%, and then you'd have 40,000 a month. My God, it's incredible. Here's the big one. They have 2 restaurants over 20,000 employees. We landed a payroll company over 30,000 out of Vista. That deal right there would pay the agent 408,000 a month. You guys, right, this year, health insurance has gone up more than it has in the last 15 years. So if there's an opening for health insurance, we'll seize that moment. You'll make 2 or 3 times the income if you have a health license. And 60% of companies are looking at switching their health insurance in 2026, and that's the highest on recorded history. The average per year normally that looks at switching is 15 to 25%. In the highest years in the past, it's gone up as high as 40%. And right this year, it's 60%. So never in recorded history in the last 100 years have so many companies been frustrated, pissed, and looking open-minded to switching their group health insurance. And if we can tack the group health insurance on the back end of a quantum, which is a better way to get in the door because it's free money on payroll tax savings, this is a more competitive field. But we'll bring this in on the back end, and it'll double or triple your commission if you have a health license. So we aren't going to look that gift horse in the mouth. If we can help them, we will, and we'll just take over as a broker of record sometimes. That's it for my presentation. Appreciate all you guys so much. I end quickly, right there, Andrew. All right, thanks, you guys. You're muted, Andrew, or Stan. You guys, I'll put the brochure in the chat.
Sorry, guys. Okay. All right. Anyone have any questions? All right, great. Yeah, I am. This morning you was training about. I know the health benefit. Efficiency plan. It take a while.
Yeah.
But a few months. But then, it's well worth it if and you get pay monthly. Also, efficiency is very very high. Persistency, that's very important. So Scott have a question. Go ahead, Scott.
Yeah, just real quick, Mike. I was just wondering if there's like a how-to-do sheet for approaching chambers of commerce about this.
I do. I have a how to do that sheet. Okay. So I'll put, and then I have a sheet. I'll put them both in there on how the chamber approaches their members. Okay. Because the chambers say yes to this, but this is a bet. It's better to say only members of your chamber, but below 25 and above 10 can take advantage of this. They have to be a member of your chamber. So they'll like that. I just did a chamber in Oregon, and he asked if we can be the only chamber in Oregon who has this. I was all no, but I was glad he asked that. Okay. So I'll put that in the chat. Great question.
Appreciate it.
Yeah. And one more about how you approach and talk about this to the business owner. What is your picture
You guys,
to
it's
them.
it's almost the same, and Stan Shaw knows this. It's almost the same for all B2B, okay? The magic line comes from Chris Voss. We all know it's, would you be opposed to taking 15 to 20 minutes to learn about an incredible payroll tax savings plan and how to retain your best employees and a FICA tax tip credit you're missing out on if it's a restaurant, right? So would you be opposed to taking 15 to 20 minutes to do whatever it is, right? R&D, FICA, payroll tax savings. And with payroll tax savings, you tack on it and retain your best employees because they're offering free benefits to their, no out-of-pocket cost benefits to their employees. But would you be opposed to taking 15 to 20 minutes to learn about an incredible payroll tax savings plan, as well as how to retain your best employees? And as a restaurant, I'd like to get you some information on the FICA tip tax credit the IRS has put out, to help you get back money on the taxes you unnecessarily paid on tips.
Wow, there you have it. All right. And also, is this Quantum Health you need a license to refer?
No license for Quantum, but yes, sadly, a license, yes, for health insurance. So if we tack on the group health insurance, they could be the same or probably be a higher commission than the Quantum. And so you'd want to have a health license to participate. You have to have by law a health license to participate in that piece.
All right. That's all I have. Anybody else have any questions, guys? I know we run overtime here, but it's great to learn all these benefits. I call it the Bob checklist.
Hey, Andrew.
Yes, Jeffrey.
I'm sorry, this is Robert.
Oh, Robert.
I had my hand. I don't know if you saw it.
Okay.
I had a question for Mike. And Mike, I'm a little familiar with the CHAMP plan. In fact, someone is trying to recruit me right now. And so I see that the payout savings for the employer per employee is pretty much around the same.
Oh,
However,
no. 579 fixed on CHAMP. Average here is 843 or 850 per employee.
Okay.
Almost way more.
Okay. I was told it was like 500 to 700, 800, something like that.
It's fixed with CHAMP, 579, because they basically have the 1200 plan.
Okay. And
I'm with CHAMP. I get a big check from CHAMP every month. And so we have CHAMP too. It's just that this plan, I've lost a lot of big deals, 11,000, 7,500. I've lost a lot of huge deals to with CHAMP just because it's self-insured. I think it's a great product. I think it's a great company, and I think they're great people. But I think Quantum is helps you land, especially the big ones.
Okay. Well, from the employee's point of view, it appears that the CHAMP pays about $25 more per month to the employee compared to your program. Is that correct?
I wouldn't say. I would say on the employee side, they're very similar. It's the employer who gets more money.
Okay.
Way more money. And I think the benefits, CHAMP has unique benefits, some that Quantum doesn't have, but CHAMP doesn't have the indemnity, the cash indemnity side piece. Okay. And so I think from the employee standpoint, financially, it's going to be very similar.
Okay. Gotcha.
They're both great products, by the way, but it's always better to have more than one, right?
So if I were presenting this to a large employer, what would be, or Chamber of Commerce, what would be the standout differentiation between the two?
Fully insured makes it 100 times better. Okay. So it makes it different compliance. Whatever state you're in, their Department of Insurance has approved the plan. So, a lot of people think this sounds too good to be true, but you know what? Your Department of Insurance approved it. Now, you can't say that with self-insured plans.
Okay.
That's the big difference. That's why the bigger companies go for it and balk at self-insured plans.
Okay. Cool.
Good question.
Thank you. Appreciate it.
All right.
All right, Jeffrey.
Yeah, my question actually is for Stan. If Stan's available, is he still on the call?
The tree shaker? Yes, he
He's
is.
still here. You know, no rest for the weary. My phone's blowing up. Everything's sure. What you got?
All right, man. I still haven't gotten my back office link or the countersigned agreement.
Okay, and you came in, Jeffrey. Yep, I know we sent some stuff out. Yeah, we'll look. Probably resent it out. I'll resend it out to you again.
Okay, I've looked in my mail and in my spam, and I sent you another email yesterday. Just make sure, just check from my email to you and make sure that the email that you're using back to me is the same one that I sent to you yesterday. Okay.
Yep, we had a big pile come in, and I'll try to get them all caught up over the weekend. You got it.
Thank you, Stan. Appreciate it.
Yep, you got it.
Guys, Stan is amazing. He's on top of things. So,
I know he is.
So if you don't see from receive your emails and such, email Stan right away. You know. All right, guys. I think that is it. So the next time we're gonna meet is on what day?
Wednesday.
All right.
What time? What time?
11 o'clock a.m. Pacific time for the ER3 and the latitude plan. And then right after that is 12 noon Pacific time. We're going to continue learning more on the FICA tip tax. Okay. And I saw there is indemnity sound better than IMHO. All right. Okay. All right, guys. Have a great weekend. And let's go out there and help all these business owners.
And don't forget, make sure you send me the recording. If anybody wants it,
I won't forget. I'm doing it right after we off. So, all right. See you guys next time. Bye for now.
Scott?
You.